How do you invest overseas in the midst of potential trade wars? Let's talk with Perth Toll. She's the founder and CEO of Life Plus Liberty Indexes. She runs the Freedom 100 Emerging Markets ETF. It uses personal and economic freedom metrics to invest in countries like Taiwan and Chile, South Korea, Mexico, Poland, Brazil, and others. Also joining us, my old friend Tom Lydon, former head of Verify and an ETF industry investor now. Wow. Perth, good to see you again. Always a pleasure. There is a spate of interest in investing overseas. Europe and China have outperformed the U.S. this year. Your own Freedom ETF is up 10% this year. It's also outperforming. Emerging markets countries like Poland, South Africa, Mexico are all acting better. What's going on? Why the sudden interest in global investing, but even emerging markets as well?
Well, I think it's all cyclical, right? So sometimes U.S. does better, sometimes international does better. Emerging markets has not had a good run last year, so this year they're doing much better. The freer countries always recover faster, so in a recovery like you're seeing now, the freer markets tend to outperform, and that's what we're seeing today.
Yeah, you know, Tom, it's great international investing is getting some love, but you know, international investing has underperformed, she said, the last year. It's 20 years almost, seriously, folks, almost 20 years. The allocations on international are really low because nobody's been doing it for a long time. Is there really something here other than this mean reversion trade that we all believe in, but is there something else more fundamental?
Eventually, Bob, as you know, even though we've got a lot of years in this business, the pendulum does swing, it does. Anyway, if you look at valuations, with Europe and emerging markets, China, India, it's half of what the S&P is. You look at small caps, it's even half of that. So eventually things do change. However, as you look at your individual portfolio, and especially advisors that are allocating for their clients, it's painful to be diversified, isn't it?
Yeah, so are they going to get calls now? They used to get calls saying, why am I not all in the S&P 500 or all in the U.S.? Who wants to be overseas? Are they going to start getting calls saying, why aren't I in Poland? Why aren't I in emerging markets all of a sudden? How come they're doing better and why I'm not there?
It's not happening yet because you see the flows. Even though we've seen great numbers so far year to date, we're still seeing outflows in all these areas if you look at the ETF flows.
Right.
However, during pessimistic times, new uptrends do develop. And if it gets really ugly enough, that's an area to look at.
We always say flows follow prices. Like people are trend followers. So prices go up, all of a sudden everybody notices prices are up. I'm going to buy this. So the flows increased. I mean, but we have to see that a little more consistently than 2 or 3 months since the Trump election.
And if you look at flows so far this year, just like last year, where's it going? SPY, VOO, it's going into the major bond indexes. Just the major pillars in the industry continue to get that money. So it's a little bit lopsided as far as the diversification standpoint.
I want you to explain a little bit more about the ethos, the rationale behind the whole indexes that you run here. So you invest in emerging market countries with what you call high freedom metrics. So these are countries like Taiwan, Chile, South Korea, Poland, Brazil. Tell us about these freedom metrics and how do they help countries get ahead? Why is that important?
Yeah, thanks, Bob. So basically, one of the reasons why people don't invest in emerging markets is because it's so full of autocracies. We don't want to be supporting terrorism or any of these things that go on in these countries that are not free. So because China, Russia, Saudi Arabia historically has had a very high weight in these indices that are market capitalization weighted, what we do is we freedom weight instead of market capitalization weight to get a freer country set. That way we have countries that are, it's akin to like a quality factor on the country level. We have countries that have stronger institutions, better rule of law, more protections for personal economic freedoms, and these are the countries that grow more sustainably, they recover faster, and they use their capital more efficiently. So that's where we want to be in the emerging market space.
So this is a lot. You're mentioning 86 variables here. We're putting up the screen here, and it's weighted by personal economic freedom. And I know, importantly, companies with 20% or more state ownership are excluded. This includes a huge swath of China, obviously, and I don't think you have any China stocks.
We don't have any allocation to China because of their overall freedom score. So we look at personal and economic freedom scores from a third-party think tanks, the Cato Institute and the Fraser Institute. They rate countries on 86 variables on both personal and economic freedoms.
So you're talking about things like, let's be specific, pro-trade, freedom of movement of people, and capital. You rate countries highly who have IP, intellectual property and property rights protections, currency stability. Here's countries that are so pro-trade, low tariffs: Chile, Poland. People and capital freedom of movement: Chile and Poland. Taiwan and South Korea, strong intellectual property and property rights protections, and currency stability in South Korea, Malaysia. Is it your point that when you have these things, it helps countries be more successful economically and in turn helps the stock market? That's the investing thesis here, right?
So to be clear, those things are part of the free trade metric, which is part of the 86 overall freedom metrics that our data providers are looking at. And we look at all 86 metrics. So that includes things like terrorism, trafficking, torture. It includes things like freedom of speech, media expression, and it includes things like free trade, business regulations, soundness of monetary policy, and so forth. So it's both personal and economic freedoms. And those things added together provide a foundation for growth, especially in the emerging markets where you're coming from a low base, where you're coming from lower valuations. And it's a way to capture the markets that have the highest growth potential for real growth, not just government, mandated or debt-driven growth.
How does the United States rate on this scale?
It's about 15 out of 165, so it's
relatively high.
Relatively
the top
high.
10%.
Yeah, but I think that's a good point. There's no 100% free country. Even the United States is not 100% free. It's all relative. So these are just relatively freer emerging markets.
Well, let's just ask the simple question: why has the U.S. outperformed for the last 15 years or so? Do these freedom metrics have something to do with it? Does it have to do with the rule of law, court systems? I'm trying to tie your thesis in with, for example, can we show something like the United States ranks high here? This is one of the reasons.
I think the United States does have a very strong capitalist system. It does have strong rule of law. It has strong protections for most personal and economic freedoms. Hopefully we are always going to be kind of a beacon in the world in that respect. And I think that has definitely helped our capital markets. So that's undeniable. So, absolutely the economic freedoms and the personal freedoms that we've enjoyed.
This makes sense to me. I believe this myself. I believe that access to a court of law, for example, that enforces contracts, things that you don't think of, like contract law, and ability to start up a company easily and hire and fire people as well. All of this makes the system more dynamic.
So will that support higher prices down the road? I mean, we've had for a long time here in the U.S. a lot higher prices than we've had around the world. And it seems like growth is continuing to be able to demand people pay those prices. Would that continue? What about value? Is value going to be dead for another 10 years?
That, I don't know if value is going to be dead for another 10 years. I think everything is cyclical. So value is poised for a run. I think Bob brings up a good point that the value guys also don't market capitalization weight. So those are guys in our, we're kindred spirits.
I want to go to that, but I want to ask, we're all debating this whole tariff thing right now. And I want to know how you come down on this. So on tariffs, you've noted, we put the screen up, Chile and Poland, for example, have low tariffs, but India does not. India has high tariffs, actually. So what does this mean? Do tariffs help or hurt an economy, or help or hurt the stock market, or is there a right way to look at tariffs in general?
Yeah, so again, tariffs are part of that free trade metric that we look at. Free trade is such a big component of economic freedom. Economic freedom is such a big component of our fund. So absolutely, any kind of constraint on trade, like a tariff, is negative in our view for the growth of that economy.
India has high tariffs, for example, though, but it's been relatively successful, despite the high tariffs, your point being, though, right?
India has historically had very high tariffs and non-tariff kind of trade protections on their economy, but they're a consumer-driven economy, and their internal consumer market is huge, and their population just surpassed China's. And there's a very highly educated, English-speaking population. So their demographics are very favorable. Their internally consumer-driven economy has helped them succeed. Also, in the last couple of years, with all the capital flows, foreign capital flows out of China, a lot of that has gone into India. Because let's face it, most emerging markets investors only know the BRICS. So it's either China or India. Russia's gone at this point. So I think they've benefited from a lot of that. But if they can become less protectionist, I think they would do even better.
Is it going to catch up with them, Toll? I mean, you had mentioned earlier, if you're in India and you buy a Harley Davidson from the U.S., what's the tariff on that?
It's 100%.
So you have to pay double.
It's 100% on motorcycles. Yeah, the motorcycle tariffs from the U.S.
Is that because the motorcycle industry is protecting itself?
I don't know. But yeah, it's 100%.
So
but yeah,
you ding India on that, and yet on other metrics it ranks relatively high.
Well, India has a low weight in our index because a lot of the those protectionist policies, but also they have some personal freedom issues as well. But they are one of the included countries, which means they are above average in the emerging markets.
Yeah, I know Taiwan is your largest country holding,
Yeah.
20%. Chile is 19%, South Korea 16%, Poland 14%, Brazil 7%, South Africa. Here's the list right here. And then there's Malaysia, Indonesia, Mexico. So India is really far down there. It's somewhere tiny piece here in the everywhere else category.
But it is included, so I want to.
Yeah, but it's interesting.
Quick question on Taiwan.
Yeah.
There's a lot of saber rattling about China, and what if they were to ever get really serious about invading? How would that affect your scoring?
Yeah. I mean, I haven't been in this as long as you have, Tom, but have you?
Thanks.
Almost nobody has.
Do you remember a time when there was not saber rattling about China invading Taiwan? Because I don't. Yeah. For Taiwanese people, this is a way of life, right? There's always saber rattling about it. But I think as investors, we're in a position of power and privilege to be able to allocate assets, whether it be your own assets or other people's assets. So if you can affect outcomes by the way you allocate assets, and you're concerned about, China invading Taiwan, I think let's support the freer country that is, encouraging freedom in the world versus the saber rattling terrorism. Countries.
I just want to get a sense of what you own in this, because we're talking about countries here. But here's your biggest holdings. You own Samsung, which is a big South Korean company. Taiwan Semi, which is in Taiwan, obviously. Banco de Chile, Bank Polska, which is the biggest bank in Poland. Hynix, there's a tech name here. Fairly broad group of stocks here. It's not particularly sector specific. There's Latin America Airlines, LATAM, a big airline in Latin America, MediaTek. Hanhai, they're in Taiwan, but they're huge in China, where they make Apple phones, for example. Anything you can tell us about? It's an interesting mix. Thematically, there's nothing coherent about it, but what holds it all together, your index?
Yeah, I mean, just a little bit of how we get to that is we take the top 10 largest, most liquid securities in each included country, and those are market cap weighted within their freedom weighted country weights. So there are going to be companies like Honghai, which is Foxconn, who do a lot of production in China. We don't penalize that trade. Again, free trade is very important to us, and we want to encourage trade. It's the ownership that matters. Are they owned in Taiwan, where they are free to put their own best interests before that of the state, right? If you're a Chinese company and you're in China, if you're Jack Ma, there are certain things you can't say. There's certain things you can't do, but you have to put the state's interest first. We want companies that are free to put their own stakeholders' interests first before those of the state. And if you trade with an unfree market, that's okay. You can change that if you want, but as long as it's your choice.